So I don't see that there's anything wrong with an organization, especially a for-profit entity, trying to focus on being profitable. I think that's only logical. What I think is an issue is when we look at things purely from a cost-cutting perspective without assessing the impact on the customer, right? So we need to make sure that what we're doing is optimizing our business operations, streamlining, improving efficiency wherever we can. And there's lots of ways that, organizations have been doing this. Sure. So first of all, how effectively we're delivering our customer experience, it really should always lead back to customer feedback. We need to see that our customers are really interacting with us and experiencing their interactions the way that we want them to be, right? The desired customer experience. So there's a high profile study in the States actually that asked business leaders, mostly CEOs, of medium and large sized organizations, whether they think they're delivering a superior or an excellent customer experience. And 80% said, yes, we're doing that. And then they asked the same organization's customers, and only 8% agreed with them. It's quite a well-known study. So there was a huge disparity between what these organizations believed they were doing and how effective they believed they were being in terms of their CX delivery and the reality as lived and experienced by their customers. So I think there's a few things they can do. First of all, you can look objectively at how advanced you are and how mature you are in certain areas of CX measurement, of delivery, and of much of what you're doing across the organization. Again, you must always overlay that with customer feedback to see how you're doing in your customers' eyes. It doesn't mean that there's not areas to improve. If the customers are happy, you can always try to improve and raise the bar on what you're doing. But ultimately, if there's an issue, your customers will let you know about it and tell you where those pain points lie, right, at the different touch points. And then if you still feel that you're really not sure how to benchmark how you're doing, another great option is to bring in a consultant or someone that can bring an outside perspective. That adds a lot of value because they bring an outside perspective from your organization. And if they're also someone that's doing this full time, they will be able to benchmark and compare against others in your sector and even other industries to see how advanced you're doing. So that can be a really useful tool to do on an ongoing basis or even as an ad hoc initiative to just again assess where you're at on your customer experience journey and see how you can improve. So I try to view it that they're not at odds with each other and they're not conflicting because any for-profit organization should be profitable and should be successful. And that's in everyone's interest. It's not just because there's, greedy shareholders that want to have a return. Of course, shareholders want a return. And those shareholders, by the way, are often everyday people as well. They're not only, very large organizations or entities. But ultimately, for the customer, it's beneficial if an organization is successful. It often means they can be competitive. It means they can extend perhaps some of the service offering. So, and ultimately means they're stable. So in my case, as a bank, it's really important that the bank is doing well for our customers and for the sanctity of their deposits, their overall relationship and financial well-being with us. And it's the same in many sectors. So I don't see that there's anything wrong with an organization, especially a for-profit entity, trying to focus on being profitable. I think that's only logical. What I think is an issue is when we look at things purely from a cost-cutting perspective without assessing the impact on the customer, right? So we need to make sure that what we're doing is optimizing our business operations, streamlining, improving efficiency wherever we can. And there's lots of ways that, organizations have been doing this. But ideally, at the same time, it should be improving the customer experience. And there are technologies and ways that we can improve our efficiency, reduce manual intervention, for example, and actually improve the customer experience. So if we invest in the right areas, we'll not only be improving our effectiveness in terms of ROI and in terms of our profitability, but we should also be improving our customer experience if we're strategic about where we're focusing our investment. So remember that ultimately we need to align our CX initiatives to the company's overarching initiatives. So what is the organization trying to achieve? What's our, priorities at the moment? Our CX initiatives should directly feed into and support those overarching ambitions that the company is trying to reach. So if your company's number one priority right now is to attract more of the younger generation, for example, then focus on what good CX means to that demographic. How do we improve and excel for that target customer? But ultimately, as I say, I try to see that they're not at odds. And that if we're strategic and intelligent about it, we can improve customer experience whilst also being profitable, highly profitable if we do it well. So an underrated way of building trust is definitely through complaints handling. That's one of the areas that's actually under my remit is complaints management, and it's something I'm so passionate about, for a number of reasons. So something I do see across the board, I attend most years the Complaints Management Forum. It's an event held in London. And something I've observed is that some firms approach complaints handling as an obligation, as a box ticking exercise, as a compliance requirement. And it may well be all of those things, depending on how you view it. But it's really a mistake if you view it only as something you have to do, rather than something that actually adds a huge amount of value to the organization. So from the business's perspective, it's a wealth of insight, which really is gold dust and can really help you focus on where you can improve and ultimately improve your business's effectiveness and profitability. From the customer point of view, it's a great chance that we know that the service recovery paradox rings true, that if we solve issues in the right way, we can restore those customer relationships and even strengthen them. So, especially in an increasingly digital world, when's the last time you went to a bank? For many of us, it's not very often, like it was a generation ago. So that means that it might be one of the only times I'm interacting with a bank or with a company, it doesn't have to be only banks, is when there's an issue, when there's a problem that needs solving. So it's really important that when I do reach out, and I have that rare interaction with the organization that I get the support that I need. And it also not only solves my problem I have right now, but it gives me that peace of mind that if I have any issues in the future, the company will be there to support me through it and to solve it for me. So that's really important. And that complaints data then should feed into your continual improvement cycles, which ultimately will fuel the growth of the organization. A major shift, not only in banking, but in the business world in general, is definitely the continued evolution of AI. Recently, I've been reading a number of reports that are issued annually. They're called things like the State of CX, and they're issued by a number of different organizations and CX professionals. And AI features in all of them in terms of the increasing adoption and prevalence of AI. It's ubiquitous at this point, it's everywhere. So what does that really mean for customer experience? Well, I think what it means is that customers will become increasingly independent. I soon believe that in the near future, people will have personal AI assistants. So it will be an evolution of what's already there today, but it will be even more advanced and personalized to what each user needs. And this will mean that customers are more independent, and will also mean that experiences therefore become more uniform and that the way people are approaching things might become more uniform. This happens a lot in heavily regulated markets like ours as well. If the regulator is very, very specific and explicit about exactly how you must operate, you become very similar to your competition. So you have to find ways to differentiate. So I think that's going to get harder and harder to stand out from the pack. But definitely the continued evolution of AI is the major shift that I see coming in the next 5 years. It's already happening with us today. I'll try to avoid the usual suspects that are often cited as best practice examples and look a little bit beyond them. First of all, before I think specifically of banks, as a CX professional and a banker, I look beyond only the banking sector for inspiration. I often find ideas and inspiration from retail and from other sectors, other markets, that you can apply to the banking model. And if you see something that's not being done in your sector, in your market, that's going to be even more impactful than if it's something that a competitor is doing. So I always try to look beyond only banking and the banking sector. For example, just really small initiatives. We introduce colouring sheets in our branches so that if our customers come with their young children for an appointment for a meeting, we can give them a colouring sheet. It's branded with the bank's artwork and they can colour it in with a box of crayons. This is not something particularly novel. I mean, restaurants have been doing this since I was a child and long before. But it's not something I had seen in a bank. So it's just again thinking a little bit outside of the box. Coming back specifically to banks, though, there's a number of banks that I like. So, one of my overarching inspirations was Commerce Bancorp in the US, which later sold for billions and was founded on a capital of just around 1 million, which even at the time for a bank is really a drop in the ocean. And what I liked about their whole model is they really tried to approach it differently. In fact, it was founded by people that had expertise in different sectors, like the automobile sector and also running franchise of fast food restaurants. So they had no prior banking expertise, but what they did was they approached it as a bit more of a retail model. In fact, they called their branches stores instead of branches. It was these distinctions, and they were very, very customer centric. The same model was then applied in the UK essentially when they started Metro Bank, which again is a leader of CX in the UK market. But there's lots of smaller banks that I think are really getting it right as well. I mean, we're a community bank, so I look to banks like Kiwi Bank in New Zealand. They are especially customer centric because they have not one but two chief customer officers, which is something I've never seen before. They have one for their retail and one for their business customers. It's a great achievement if an organization has one chief customer officer. So to have two, really shows you how high on the agenda customer experience is at Kiwi Bank. So it's taking inspiration from lots of places, I would say, and not only being limited to your market or your sector. Sure. So, of course, I'm biased because I'm a CX professional, but I really do truly believe to my core that investing in customer experience is a complete no-brainer. So, focusing on CX delivers long-term sustainable competitive advantage that's extremely difficult to replicate. We know from market trends and research data that CX is only increasing in relevance and importance to customers. Just recently, Shep Hyken released his annual State of Customer Service and CX research paper. And this outlined, as many other studies have done so before, that service trumps price and that companies' employees are the most influential factor in whether a customer will return. So even in this increasingly digital landscape that we're in, the human component is really important in many sectors. And it's more important than ever before that companies are therefore investing in it. Ultimately, when we're evaluating whether to invest in a particular business area, you should evaluate not only what it will take to invest, but what are the implications if you do not. So, as well as looking at the ROI of doing something or investing in something, if we don't and our competitors overtake us, for instance, or surpass us in terms of their maturity in a certain area, can we afford for that to happen? What could the detrimental impact be? So you sometimes need to look at it the other way around of what's the risk of not doing it? Because it takes time to advance CX efforts. It's not something you can start doing overnight. You can certainly make a start, but to make a meaningful impact in CX is a long-term game. So we really need to be on our toes all the time. And it might be too late by the time you're playing catch up to really bridge that gap. So what I would say is don't let it appear in the first place and really ensure that you're investing in long term. But CX is for the long term. It's a sustainable competitive advantage. And where the carpet can be pulled from under you on aspects such as pricing, or if a competitor copies a product or a service that you offer, your customer experience delivery is extremely difficult to replicate and cannot be changed overnight. So a competitor cannot suddenly replicate the entire way that you approach your customer experience delivery.